This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Wall Street and Washington, the two intersected today when some of the biggest names in business, from Walmart to ExxonMobil, asked the president about some of the biggest issues facing their companies and the economy.
And there's one matter that could keep business leaders up at night in the new year. We'll tell you what it is, all that and more tonight on Nightly Business Report for Wednesday, December 3rd.
Good evening, everyone. I'm Sue Herrera. Susie Garrett is off tonight.
And I'm Tyler Matheson. Welcome. Well, modest gains for stocks today. Enough, though, to notch record closing highs for the Dow and the S&P 500. But we do begin tonight with a meeting of the Business Roundtable, a collection of top chief executives from some of the nation's biggest companies weighing in on matters important to business and the economy. Concerns like tumbling oil and gasoline prices, immigration reform, the gap in finding skilled workers, tax reform for businesses and individuals, and much, much more. They took their concerns straight to the president today to discuss ways Washington and Wall Street can work together to create jobs and promote growth. But before those chief executives, including the leaders of four Dow components, AT&T, Caterpillar, ExxonMobil, and Walmart, talked to the president, they spoke to Becky Quick.
The nation's most powerful CEOs gathering in Washington today at the Business Roundtable. Among the themes discussed, plummeting energy prices, a skills gap leaving companies struggling to fill some jobs, and spending being held back by the nation's tax policy.
We are of a mindset this could be This could be a 4% growth economy if just a few fundamental things are done in terms of tax reform and in terms of regulation and how we think about regulating business. So, I think we're all apprehensive to do a high five and declare victory here when so much more is possible.
Next year we will get a little healthier, but remember we're still running sub 3% growth. And for us, we have a high correlation of 3% growth and job creation. Very simple. Almost in any economy in the world. When we see 3% GDP growth, we are adding jobs. For skilled trades, for a lot of the really difficult jobs, our service technicians, it's hard to find qualified people.
Now to those falling energy prices. I asked the CEOs of ExxonMobil and Walmart how the sharp decline is impacting their businesses.
It's not the first time we've been through a price correction. For a lot of our younger people, this will be their first experience to go through a commodity price correction. But it really means just a return to fundamentals for us. It's important about watching your cash, watching your investment decisions, being very disciplined about everything, and then looking for opportunities that may present themselves in an environment like this.
I don't think there's any doubt that low fuel prices are helping retail and helping us in particular. It's a little bit of a tailwind. When I got here yesterday, Rex from Exxon said, hey, I haven't gotten your thank you note yet for having low fuel prices.
Right.
So no doubt it helps. I think it's important to remember for us in the U.S., we serve the U.S. demographic. Our customer base looks like the bell curve of the U.S. from an income point of view. We do have a very important middle income and lower middle income business, and we do have some customers who still pay in cash. About 25% of our transactions are still done in cash. So it's that customer in particular that if it went into the gas tank, it wouldn't be spent on some item in our store.
Overall, the most common word used by CEOs to describe business right now, okay. We're not talking great, we're not talking bad, but okay. For Nightly Business Report, I'm Becky Quick.
And then those same CEOs and many others got to hear from President Obama and participate in a rare question and answer session, delving deeper into concerns about regulation and the widening wage gap. Eamon Javers has more.
Well, good morning, everybody. Happy holidays. Hope sales are good.
President Barack Obama met with some of the nation's top business leaders today to deliver a message that the U.S. economy is strong, and he also took a moment to encourage them to boost worker pay.
Unfortunately, the overall trend lines, though, have been, even as productivity and profits go up, wages and incomes as a share of overall GDP have shrunk. And that's part of what is creating an undertow of pessimism, despite generally good economic news.
The president also pushed back on business complaints that Washington regulations are holding them back.
That the Republicans, and maybe I'd throw the BRT in here, are actually about 25% right when it comes to regulatory burden.
With so many global CEOs in Washington for the Business Roundtable meeting, it was a day where the business community also told Washington what it wants from the nation's capital.
The United States has a very uncompetitive tax structure, and if we want that capital being invested in the U.S., we need to fix the tax code. And the second is regulation. When we ask the CEOs, the cost of regulation is a big concern with people.
I think there is actually a realistic probability of some form of tax reform.
Takes a while.
It's going to take a while. I think the concept would be has to be revenue neutral, and if you have that concept that it's going to have to be revenue neutral, some companies are going to accept they're not going to get the some of the tax deductions that they previously get.
But despite that, what we didn't see today is the sometimes confrontational undertone that we've seen between business and the White House in the early years of the Obama presidency. Clearly, these two groups have learned to work together. For Nightly Business Report, I'm Eamon Jabbers in Washington.
Well, one of the other major concerns for business leaders, of course, is health care. And today came some positive news on that front. According to the Centers for Medicare and Medicaid Services, healthcare spending in the U.S. grew at the lowest rate ever recorded last year. But with new regulations of the Affordable Care Act set to take effect in 2015, some companies could face legal headaches. Bertha Coombs has our story.
Honeywell never expected to be sued over its wellness plan. Under the Affordable Care Act, it can use incentives to reward employees who work on their health and charge more to those who opt out.
If they don't get the survey, then they have to pay $100 more a month for their policy. So we don't refuse anybody any coverage. And the whole point is, why should people who don't care about how they're living, why should they be being able to take advantage of all the people who do care?
Trouble is, under the Americans with Disabilities Act, requiring a medical screening, then punishing people for not getting one is discriminatory. That's why the Equal Employment Opportunity Commission has sued. Some analysts see more lawsuits ahead, with the so-called employer mandate going into effect in January, requiring large firms to provide insurance for workers who put in 30 hours a week. Under the ACA, workers could sue if their hours are cut and they lose coverage. Chris Williams of Travelers Insurance says employers haven't been focused on those risks in the law, but plaintiffs' lawyers have, and have already been looking to line up aggrieved workers.
There's thousands of pages of regulations, and they're going to look through those regulations and the statute to come up with novel causes of action. We've started to see that already.
It's not just private companies. Municipalities with large numbers of unionized workers, teachers, firefighters, and officers could also find themselves caught between conflicting parts of the health reform law.
Labor lawyers say it could intensify next year as employers try to cut back on benefits on those rich union plans in order to avoid one penalty of the ACA, the so-called Cadillac tax. That could well expose them to another side of the health reform law in the way of litigation. Bertha Coombs, Nightly Business Report, New York.
More now on the record high closes for the Dow and the S&P today, following some pretty good news about jobs and worker productivity, which grew at a faster than forecast pace of 2.33% in the third quarter, while labor costs declined. At the closing bell, the Dow was up 33 points and closing in on that 18,000 mark. The Nasdaq added 18 and the S&P was up by 7.
Well, stocks are up, and today another top Fed official repeated his call to begin raising benchmark interest rates too, and to do it soon. Charles Plosser, president of the Federal Reserve Bank of Philadelphia, says that keeping rates near 0%, with inflation, in his view, close to the central bank's goal, and the economy nearing what he says is full employment, it's just too risky. And he says it's time the Fed moves toward lifting short-term rates.
Meantime, the Federal Reserve's final Beige Book survey on the economy for this year was released today, and its outlook was a bit more upbeat than in past readings. And that's good news ahead of this Friday's November jobs report. Steve Leisman has more.
The Federal Reserve painted a picture of steady growth in the U.S. with widespread job gains and an optimistic outlook among businesses. The Fed's Beige Book, a collection of economic anecdotes from the 12 Federal Reserve bank districts throughout the country, backed up recent strong economic reports.
The economy is in good shape. It's not great, it's good. It's been a Rodney Dangerfield economy. It hasn't gotten a lot of respect.
The Beige Book said business spending improved and that retailers were upbeat on holiday sales and that lower gas prices would help consumers out when they went to the stores for the holiday shopping season. The main negative? Real estate sales rose in only half the country and home prices were little changed. But beyond housing, other economic data has been upbeat. A key report on the service sector hit its second highest level since the financial crisis, with gains in new orders and exports. Auto sales topped the 17 million mark for only the second time since 2006. And the ADP jobs report came in a touch below expectations, but still suggested that private sector growth will remain strong at 208,000. The Friday jobs report will set the stage for the rest of the month. Wall Street economists looking for a total of 230,000 jobs to be created in November, and the unemployment rate to remain unchanged at 5.8%. That'll continue the string of 200,000 plus jobs created in the U.S. economy and show that these strong economic numbers are showing up in more American paychecks. For Nightly Business Report, I'm Steve Leisman.
Gus Fauché joins us now to talk more about the U.S. economy. He's senior economist at PNC Financial. Gus, welcome back. Good to have you with us. Why don't we spin forward to Friday and the jobs number? What are you looking for? And what would alarm you on the downside if the number doesn't come in quite as high as forecast?
We're looking for 230,000 jobs added in November. That's close to the average we've seen so far in 2014. If it was below 200,000, I'd be a little bit concerned. That's slower than the pace we've seen this year. But, overall, it looks like the economy is adding jobs at a decent clip, and the job growth is broad-based. It's across industry, so that's a positive as well.
You know, Gus, the one worry is those people who have been out of work for a long period of time and are discouraged workers, and they don't show up on the rolls at all. And there are those who say that that's quite a large portion of parts of the population. Does that concern you?
It does. We've seen the labor force participation rate, which is the share of the working age population that's either working or looking for work, that's stabilized, but it's still near a 40-year low. I do think that there are a lot of people on the sidelines who would come back in as the labor market gets stronger. I think we will see that, but it hasn't been as strong as we'd like to see. But I think as the job market picks up, as wage growth picks up, we will see some of those people coming back into the labor force.
We had the report there just a moment ago from Bertha Coombs on the Affordable Care Act. And some people have felt for a long time that law was going to restrain hiring or depress it. Now, clearly, some of the provisions of it have not kicked in just yet. More will next year. Have you seen any evidence that businesses have held back on hiring as a result of the ACA?
We've seen anecdotal evidence, but the aggregate numbers look pretty good. And certainly one thing that we have seen is that we do see businesses moving workers from part-time to full-time status. There was some concern that they were holding off of that because of concerns about the ACA. But so far at a macro level, we aren't seeing a sign that businesses are reluctant to hire because of the ACA. It could be that that'll be more prominent in 2015 as some of those mandates start to kick in, however.
Let me turn you to the data that we got today because there was quite a bit of it. What does it tell you about where we are in the economic recovery? We're not quite at expansion, certainly, in some cases, in some parts of that data, but it's been pretty decent recently.
That's right. I think things have definitely looked stronger. We had a bad winter in 2014 that affected many parts of the country. But since then, growth has been above 3% at an annual pace. And it's been broad-based growth. So we have consumer spending, we have businesses investing. Housing market recovery is still slow, but it is picking up. A lot of industries adding jobs. We even have government adding jobs, which wasn't the case for a number of years. So we really have an economy that's firing on most, if not all, cylinders at this point. And that's why I think things have looked better in the last half of 2014.
Very quickly, what does low oil price mean for the U.S. economy?
On the whole, it's a positive. It means consumers have more money to spend on Christmas presents, and it also means businesses have more money to hire and invest.
All right, Gus, thank you very much. Have a happy holiday. Gus Fauché with PNC Financial.
And still ahead, the Airbag recall expands as 2 automakers take it nationwide. Details ahead.
A new legal challenge to President Obama's executive order that's aimed at easing the threat of deportation for nearly 5 million undocumented workers here, immigrants in the U.S. Texas leading a 17-state coalition suing the administration, saying the president doesn't have the authority to rewrite immigration laws and that the order was a reward for people who break current U.S. policies.
Two major automakers are expanding their recall of cars with potentially defective driver's side airbags made by Japan's Takata Corporation. Chrysler is adding 149,000 pickup trucks in 7 states to an existing recall in a handful of southern states. Earlier today, Honda expanded its current recall to all 50 states. At a hearing on Capitol Hill, an executive from Honda said the company will still prioritize recalls in high humidity areas.
Why are we doing this? Because our customers have concerns and we want to address them. We believe this expansion and acceleration of current action, we believe there will be a part shortage that may occur, despite Takata's efforts to increase the supply of inflators.
To alleviate some of that shortage, Honda says it's working with other airbag manufacturers as well. 5 deaths have been attributed to Takata airbags, which can explode and send metal shrapnel into the car's passenger compartment. Takata is rebuffing demands for a nationwide recall of all of its cars with the airbags, saying the demand isn't supported by the evidence.
Abercrombie slashes its outlook because of a tough retail environment, and that is where we begin tonight's market focus. The teen retailer did manage to post earnings that beat estimates by a penny, but revenue was below forecast and same-store sales tumbled 10%. It slashed its full-year profit forecast, saying it expects retail conditions to remain difficult. Despite all that, shares rose almost 3.5% to $28.81. Go figure. Aeropostale posted a loss after the bell. Matched estimates, but after it announced that it will close 75 stores in the fourth quarter, shares initially tumbled in after-hours trading. This is the company's 8th consecutive quarterly loss, which it blamed on weak mall traffic, among other things, and you can see the stock really plummeting there after hours. Before the close, shares were up about 4% to $3.19. Brown-Forman also lowered its earnings outlook for the year, blaming currency issues. The Jack Daniels maker's earnings and revenue missed Wall Street forecasts. That made the results even harder for investors to swallow. But it'd go down better with a little Jack Daniels, I suppose. Shares fell $3.75 to $92.25. An unsolicited buyout offer sent shares of Carbonite higher today. J2 Global offered to buy the rest of the cloud-based backup company that doesn't already own, valuing it at $15 a share. Carbonite, which is a small-cap stock, saw its stock surge almost 23%, as you see there, to $14.44. J2 Global also up about 6%, in its case, to $60.33.
Johnson & Johnson has hired Goldman Sachs to explore a sale of its Splenda brand. That's according to reports. Selling the artificial sweetener would let the healthcare company leave that business, which has faced challenges because of weak soft drink sales and increased competition. Shares were down slightly to $107.72. Kraft Foods is hiking the price on most of its single-serve coffee K-Cups for the first time. The maker of Maxwell House Coffee blamed higher commodity costs, saying the prices will be about 9% higher starting December 28th. Shares were up a few cents to $60.19. And Hershey is considering ditching high-fructose corn syrup in some of its products. The candy maker said consumers prefer sugar. The idea to switch comes amid concerns that corn syrup is more unhealthy. Some of the products that could be affected are Almond Joy and York Peppermint Patties. Shares were down slightly to $99.89. And Corning hiked its dividend by 20% to 12 cents a share, which will be paid to shareholders at the end of March. The specialty glass company also unveiled a new share buyback program of $1.5 billion. Its shares rose 2.5% to $21.54.
Coming up, lots of packages are, of course, being shipped at this time of year, but getting a box where it needs to go is a very complex, high-tech process. You can't believe the conveyor belts you're about to see. We're going to take you along for the ride next. Are you watching more or less TV these days? And are you watching those shows on new devices? The media ratings company Nielsen says that traditional TV viewing, like watching broadcast or cable television, fell by 4% in the third quarter of the year. But during the same period, streaming of TV shows and movies through services like Netflix or Amazon Prime shot up by an astounding 60%. And there was a big jump in viewership on smartphones and tablets.
No pressure here, but there's 21 days until Christmas. And shippers like FedEx are working hard to avoid last year's massive delivery delays caused by wicked weather and too many late orders. So we followed the shipping route for one holiday gift box to see just how complex that process really is. Morgan Brennan has more from Washington.
For FedEx, this is the most important time of the year. The parcel carrier expects to ship a record 290 million packages this holiday season, and do so while preventing a repeat of last Christmas, when some gifts didn't make their shipping deadlines. We got a behind-the-scenes look at FedEx's express operations, shipping a package of wine across country overnight delivery.
That particular bottle currently retails for almost $4,000.
First off, picking the wine, and as you can see, there's a lot to choose from. The journey started Tuesday at Wine.com's distribution facility in Berkeley, California. We settled on 4 bottles from California, carefully packed up to get them there safely. So now our wine, which is in this box, is ready for its 2,800-mile journey across country overnight. Off to FedEx in Oakland, where it hits its first round of sorting.
It will go through our automated sort, and it will be loaded into a container and depart tonight on our outbound priority overnight flight.
This facility is busy, but nothing compared to the next stop, Memphis. Middle of the night, but no sleeping here. A ground crew greets our cargo at FedEx's biggest sorting hub. This facility is known as the Matrix. Miles of conveyor belts, millions of packages a day. Most FedEx Express shipments pass through here, including ours. Now East Coast bound to Dulles, Virginia. From tarmac to truck in under an hour, it's on to the nation's capital for the third and final sort. Well, here it is, and at least from the outside, it looks like it's in one piece. Now loaded onto the delivery truck, our wine goes out to its final destination, CNBC's D.C. office. From weather to logistics, many factors need to go right when shipping a package. FedEx employs 15 meteorologists and has invested billions of dollars over the last several years into ensuring that entire process goes according to plan. Today, at least for our precious cargo, it did. For Nightly Business Report, I'm Morgan Brennan, Washington, D.C.
I wonder what she's going to do with that one. The price of oil may have edged a little higher today, but prices at the pump continue to fall. And today, something no one has seen in quite some time. Regular gas now sells for under $2 a gallon. Where? Oklahoma City.
Wow. And finally tonight, a real surprise in the coveted pick for Truck of the Year at Motor Trend magazine. The mid-sized 2015 Chevy Colorado took top honors, and not the redesigned, more fuel-efficient, aluminum-bodied Ford F-150 pickup, which hits showrooms this month. Motor Trend editors say they admire Ford for cutting as much as 600 pounds from their truck, but it simply, quote, wasn't best in class. And the Chevy truck was. Fancy that.
How about that?
That'll do it for Nightly Business Report for tonight. I'm Sue Herrera in for Susie Gareb, and we want to remind you this is the time of year your public television station seeks your support.
And I'm Tyler Matheson on behalf of your public television station. Thank you for your support. Have a great evening, everybody, and we'll see you back here tomorrow night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Tyler Matheson with the Nightly Business Report News Brief. President Obama met with 100 CEOs today, tackling issues like corporate tax reform, wage disparity, the nation's crumbling infrastructure, a skilled labor gap, and tumbling energy prices. Well, new record highs for the Dow and the S&P today, following a largely upbeat assessment of the economy in the Fed's latest Beige Book survey, a bump up in worker productivity last month, and after the private sector added 208,000 jobs last month. Here are the numbers at the close. The Dow up 33 points, NASDAQ added 18, and the S&P bulked up by 7. 17 states are suing the administration over President Obama's executive order aimed at preventing the deportation of millions of immigrants. And gasoline selling for under $2 a gallon today in Oklahoma City. And tune in to Nightly Business Report right here on your public television station.